Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on Nasdaq-100 levels to watch across multiple timeframes. And Brian, there's been a lot of news to focus on this week as we're just under 3 weeks away from the elections. COVID-19 is still an issue. Vaccination trials have been put on pause, and the market continues to hum along for the most part. So I want to take a look at your first chart here, and this is really interesting. I didn't realize technical analysis could be applied to COVID-19 trends, but here we are.
Hi there, Jill. Yeah, so it's definitely been a busy week. A lot of talk around the stimulus still up in the air. Q4 earnings season's underway, largely led by the financials, which are beating on the top and bottom lines, mostly by the big banks. But stocks have been kind of weak in reactions because I think a lot of the beats have been due to trading, which is a lower multiple business, very volatile. And then certainly, as you just noted on coronavirus, there's been a lot going on. We are seeing a rise in cases, and we did have some concerns as Johnson & Johnson and Lilly both paused their trials due to safety concerns. But yeah, so here's the chart of the daily cases of coronavirus cases, excuse me. And you can see this big uptick here in the summertime, and we've been fading since late July, August. And what I have here, the black line is a 14-day moving average, and you can see that bottomed in mid-September, and over the last few weeks has been trending higher here. So we do have a very lumpy day-to-day number, some random spikes here and there, but the moving average, the 14-day average, is turning higher, and that is raising concerns about as we head into the winter flu season months just ahead of us.
Right. What's interesting, though, if we take a look at the chart, we can see that in the beginning of it, the case count was lower, the death rates were higher. As you move towards the summer, where we had that peak in cases, the death rates moved lower. So I guess you can extrapolate that what we understand about the disease with some time and science under our belts, it's being treated better. I guess that's a silver lining to some of the data that you're showing.
Yeah, it certainly seems to be the case. As you noted, we had the spike here in the summertime to all-time highs in the daily number of cases. And then in the lower panel here, you can see the number of deaths, especially if you look at that moving average where it really shows a clear trend. That stayed down and stayed lower. There was a relatively modest rise into August, but their 14-day average has been continuing to trend down. Even with this recent rise in cases that we've seen in the last, say, few weeks, the trend in the number of deaths on a daily basis has remained low. So, that's certainly a positive to see. Let's hope we can continue that, into the winter months.
Yeah, certainly. Let's hope so, especially with the colder weather coming. But let's switch gears a bit and take a look at some fresh levels in the Nasdaq-100. Of course, many of the constituents of the Nasdaq-100 have been a beneficiary of the trends that have been accelerated due to COVID-19. And I didn't even think you could call it the work from home trade anymore. I think it's a work and do school from anywhere trade.
Yeah. What's been interesting is that value had a good start in the beginning of the month, but growth stocks have come back, and the two groups, value and growth, are up about the same amount this month so far in October. Last week we were looking at this level here on the futures, 11,570, 570. The purple horizontal line, the pink horizontal line. We did get the breakout on Friday. We ran higher into Monday, consolidated, and now pulling back the last late yesterday into today. But we're still well above that breakout line from Friday. And that was a level in place for about a month. So I still think we look constructive, as we're holding above that level. If you go back now to the NDX cash and we look at that on the daily time frame, filter out some of that noise and showed a little bit longer period. I think I got the wrong one there. we could see we're pulling back in for a retest. I think I have it now. Sorry, one of those working from home challenges. But you can see here was the breakout on Friday, Monday, and now we're just, pulling back. We still haven't even filled this gap yet, which was created on Monday's session. So that's down at 11,727. That's my expected support level, a minor support. And then we have a next level of support down at 11,566. So 11,727, about 100 points down from here, and 11,566. Those are our two support levels that I'm looking for if we do see further weakness in the days ahead. But we are getting close now to marching up towards those prior highs into August. So I think the broader market looks good, and we are seeing that strength in the Russell 2000 and other groups like industrials. Financials are attempting to hold their gains over the last few weeks, and so we'll have to wait and see. But overall, the intermediate to longer term trend, particularly for the NDX, remains very constructive.
All right, and to wrap up here, what are you seeing in terms of market breadth?
The breadth, well, for the NDX, for the breadth, what I like is that the advanced decline line, which I'm going to pull up here, that just recently made a new high, and that was on the 13th, so just a couple of days ago on Tuesday. That advanced to new all-time highs. That's typically viewed as a leading indicator, and as well as the percentage of members within the NDX trading above the 200-day moving average. That's what we're looking at here. That just also made a new high a couple of days ago, over 91%. So maybe what that's telling us is, that's a pretty extreme high level. We haven't seen that going back for, quite a few years. So, maybe we're for some consolidation. If we look at the number of stocks trading above the 50-day moving average, that's actually, making what we'd call a bearish divergence, where it's not trading as high as it was just, say, a few months ago back in May. So this was probably capturing that September activity where many stocks were trading in a corrective pattern after that strong uptrend where we were up 84% from the lows. So that's probably what we're capturing here, this lower high in the number of stocks making or trading above the 50-day moving average. But I think overall the breadth readings are good. Advanced decline line is at new highs. Number of stocks over the 200-day moving average is at multi-year highs. So, good signs for the intermediate to longer term trend.
All right, Brian, good stuff. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.